The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter.
Hi everyone, certainly this is not Kate Stalter. I'm sitting in for Kate. Kate is down at a convention or conference and she's doing some interviews, etc. You know, she does a great deal of work and she's kind of a journalist as well as having two shows here at TFNN, plus her the Small Cap Roundup and a Small Cap stock newsletter, brand new newsletter. It's just started about a month or two ago, and yeah, as Jay says, deep voice, Kate, you got a cold? So this is what I'm looking at here. Basil Chapman, sitting in for Kate Stalter. I have the show Monday, Wednesday, and Friday at the same time, 11 o'clock till noon. 877-927-6664 is the number to call. Love to take your calls. And I will focus on small caps. I'm, in fact, going to focus on small caps I've written down here over a period of time that I know Kate has mentioned. So let's get straight to work. We've got the Dow after a spectacular run-up yesterday. The Dow is now up 80 points. This is very interesting. The Dow 30 is up 80 points, up 0.65%. The S&P 500 is up 0.36 at 4.75. Negative divergence there, and what I usually consider is that when there's a negative divergence and the 30 stocks are more powerful than the 50, than the 500, you got to be a little bit careful. I'll go through all of that in a moment, but let's just go through the numbers. Right now, the Dow is up 81 at 12,496. Now, this is very interesting because the Dow actually today went to 12,555. Just briefly, in my work, my service is called the Opening Call. It's a very comprehensive look at the markets every single day, go into great detail using the Chapman wave methodology. I'm showing a chart now. If you're looking at Tiger 1, you will see a chart of the Dow. You'll see all this notation. You probably can't read; it's too small. Is what this is just one chart. I do all this notation. I discuss exactly what we're looking at here, why we're looking at it, what we've got to look for in terms of parameters, and then I usually add a couple of lines, either the day before or the morning of the newsletter as it goes out. This one usually goes out about between 6:15 and 6:45 in the morning, and then what I do is I add some more script. I put in notes that I think are very relevant to the market conditions as we are looking at them right at that moment. So basically what I'm looking at is this down channel. And I have a master trader series. We call it a master trader series. Actually, I'm calling it a Chapman Wave all-day webinar. And what we like to think is that we are masters of our profession, and that we are imparting knowledge. Sometimes it's knowledge that's taken years, decades even, to garner and to be able to sift through. And I can assure you a lot of it is very expensive knowledge. You don't go to school for this stuff. Our school is the school of hard knocks. And as I say, it's not just the school of hard knocks, it's the school of It's the graduate school of hard knocks, and some of us have even been to the postgraduate school of hard knocks. But you'll learn. That's the only way you can learn, because you want to certainly if you are vulnerable to a certain. I know I have a temperament. That's why I play tennis. I like to move quickly. All my life I've been into playing sports. I have to move, and I have to move quickly, like a jackrabbit. So therefore, long term, I have to make a determined effort to look at things long term. So you've got to know your character. Now, this is very interesting because I'm putting this into perspective, because tomorrow in this, I've already sent out a 60-something page script of what we're doing in the first couple of hours tomorrow. It's just really comprehensive so that we can then go live and you understand exactly what we're doing. I look at things like this. This is the down channel. It took me a long time to figure out that if I made the green line out there a breakout in this down channel, and the red line, what I call the inside check, this is where the price always gets repelled. And if you're looking, another thing that's absolutely imperative, if you're looking at a daily chart, Yes, you can make some decisions before the day's ended, but that chart hasn't ended until 4 o'clock. So you've got to wait. This looks it looked fantastic earlier on when the Dow was up in the 12,500s. It didn't look so great just a moment ago when the Dow was only up 73. Oh, now it's only up 75 because it's halfway, giving back half the gains, and the S&P is only up 475. I mean, if you were doing trading the futures this morning, there were like 5 or 6 different ways that you could have gone. But if you just kept shorting all the way and taking your profits, that was like an entire day's worth of a move of yesterday. So how you look at the markets is really important. Now, what's important here is that what if the Dow closes underneath this green breakout line? See the yellow circle that I sent my subscribers 3 days ago? I said, hey, this is very interesting. We've held the bottom line. The red would mean that we went under 12,035 into the 11,000. Hey, that's not good. But if you hold it, you go to the green line. That's called the inside track buy mode. And look how you bounce. So I just wanted to give you a quick synopsis of what I look at, and now let's go to the business of the market. So the Dow is at 12,492, having hit 12,555. The 9-period exponential moving average is at 12,365. Close under that in the next 2 days. That's a negative. The MACD and stochastic have given really nice signals, but they don't mean a thing if it ain't taking out that swing of the 29th of May at 12,600. I've waited 6 months to be able to put that into context, take out that swing with that. It don't mean a thing if you ain't got that swing. So this is very important for me, because why? You've got an arch formation, another technique I'm going to show in great detail tomorrow, that says in this arch technique of the weekly chart, unless the Dow can decisively take out 12,615, and that is really important because it's the 9-period exponential moving average, which used to be beautiful support, but now it is resistance. MACD is still horrible. Stochastic had a very nice turn to the upside, but it's still under 20%. It needs to get over 20% to be able to sustain a rally. So here we go. There is a time price match that I have, another technique I'm going to teach, that says if at any point in the next 3, 4, 5 sessions, certainly on a weekly basis, but on the next few sessions, if the Dow starts to slide very sharply and the stochastic goes back to about 9% or 7%, that shows internal weakness. It's not showing strength. So let me just get these out the way, and then I want to go to the small cap stocks. So we've got the comp index is down, it's unchanged at 2844. The cyclical index is up 3 at 901. The S&P is up only 3.21 at 1318. Let me just show you the chart. Very important. Let's just look at this chart here. SPX, and then I'm going to show you a chart that I'm not sure I've heard Kate talk about it much at all. But I think she's mentioned it, but I'm not. I don't know if I've seen the chart, but I've got a chart of it. The S&P made a double top at 1422.38. It is under the 9-period moving average, unless the weekly chart, unless it can break above 1335. 1332 is the actual number, but unless it can break above that, that is going to be absolutely key. I'll get into monthly charts, etc., if I have a chance in a short while. I do want to quickly run through gold. Now, this is very interesting. The GLD has had a very nice bounce, and I've called it a bounce. And where did it stop? It stopped dead. When I say dead, I mean it stopped dead right at the 200-period exponential moving average. Another technique I'm going to be showing tomorrow. How do you use these moving averages? What do they mean? Well, 159.13 is the GLD Spider Gold Trust, 1/10 the price of spot gold trades at. And it hit 159.20. Hey, that's pretty darn good. And it got repelled. So that says, unless the GLD in the next week and a half can take out 160.50 to get up there, that's not good. Why? Because the stochastic was holding at 83%. It shouldn't drop below the 9-period moving average like this, and that the histogram is still good. So this is price action that is not verifying the move in in the technicals. The monthly chart has made a peak F top. I don't want to go into that right now. This is a case show. I don't have to do much of the Chapman wave right now, but I just wanted to explain it. Now I'm going to skip to the TLT. The TLT, which is the Lehman 20-year T-bond fund, had I'm calling this a peak F top at 130.38. Don't want to get into the details, just to say that can be hazardous to your health and wealth if the MACD and stochastic close decisively lower with the price plunging. Well, the price plunged, but it's still trying to hug the 9-period exponential moving average of 126.03. And if I go to the USM, I'm going to the M. I know I should look at the contracts, but I've got the M so nicely typed up. Look, it's held the up channel support. So this is an incredibly important period. In fact, I would say that the next 2-3 days are really important only if two things happen. One is if bonds close decisively under the doji candle of the 29th. If they close under 147, they're at 149.5, let's say right now. If they close underneath that, the TBT, which is the 200% inverse of bonds, will spike and it will finally break the down channel resistance that it's been in, and that would say that the TBT has to be in the 1650s. But more importantly, if in the next 3 days the TBT, which is trading at 15.88 right now, breaks above 16.94, the high of the 22nd of May, something's going on, and that's going to be really important, and we're going to have to watch that very closely. So now I think I've covered everything except I need to go to IWC. The IWC is this is a small cap. The iShares the Russell Microcap Index. From the high of the June of June of 2007, at 62.05, it plunged down to 21.46, two-thirds decline. Then what happened is it ran up from the March 9th, I think it was March, it was that February, March 9th, March of 2009 low, and it ran to the 200-period moving average, which had been tremendous resistance, pulled back sharply, and then whoosh, it passed over that, and it went to 54.20 on the 11th of April. It pulled back. Now, this is a big percentage. It's not a big move compared to that big move from 2007, but certainly on a percentage basis, 54 to 36, hey, that's something. So now look at this. It goes to, I call this gray A. In my Master Trader series now, everything's gone out for the first couple of hours. So there's the printed part of the program has gone out to people who have signed up for it. There is still time. If you want to sign up, you'll be able to sign up. It's from 9 o'clock until 5 o'clock in the afternoon. It's going to be, as far as I'm concerned, it's going to be looking at the chart patterns that should be working for you this summer in an extremely whippy summer. And I'll be right back, and I'll take calls at 877-927-6648. Basil Chapman sitting in for Kate, and I'll be right back, and we'll go into the IWC and the IWM and look at some small cap stocks. We'll be right back after these important messages.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage of TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. It's that time of year again, and the Great Panther Silver Summer Silver giveaway is back. Every day in June, Monday through Friday, we'll be giving away a Great Panther Silver 1-ounce silver bar, and all you have to do to enter is visit the front page of TFNN.com and fill out your entry. Great Panther Silver and TFNN wishing you a great start to the summer. Sign up today to have a chance to win a 1-ounce silver bar during the Great Panther Silver Summer Silver giveaway the whole month of June at TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, everybody. I'm back, but I'm not Kate Stalter. I'm Basil Chapman, and I'm taking your calls at 877-927-6648. Just let me quickly finish off the IYC chart that I was looking at. That IYC, which is the Russell Small Cap, IWC is very important. Why? Because in the microcap sector, it has had a very nice rally from 2146 to 5420, pull back quite sharply to the 38 area. Now it's pulling back under the 200 period exponential moving average. That says that if it was able in the next 2-3 weeks to climb back into the 49.50 to 50.50 area, that'll save the day in the monthly, and that weekly chart is sitting right on the 200 period exponential moving average. So it's absolutely imperative that it starts to climb, because if it breaks down, then if next week on Friday at 4 o'clock it closes underneath 45.70, the 200 period exponential moving average, that'll be very negative. So I just want to finish that, and it's got a down channel. That's the resistance. I don't know why it's not updating. So this is the 7th. Is this the 47.55? So it popped up to 48.19 and then pulled back. Yeah, okay. So I think this is the chart, but my 120-minute chart sees something completely different. All right, well, this is interesting, because the big resistance now is going to be the down channel, inside track resistance, and that comes in at about 48.42 today to 48.81, and tomorrow it'll be about 20 cents lower than that, because it's a down channel. Ari in Arcadia. Hi, Ari. I haven't heard from you in a little while. How are you?
Doing well, Basil.
Good.
I am playing with a small cap.
Okay.
WPRT. I'm not in it.
Okay. So
if the market was really strong, if I felt the market had an upward bias, I would have been in it already.
Right. So, folks, we're looking at Westport Innovations, Inc. Now, this is fascinating, and I'll tell you why. In my work, you know that I use the MACD and the slow stochastic. And I use, and I also use a 200-period exponential moving average. If anyone's looking at the chart in Tiger TV, let me just update that. You'll see that let me just quickly say, for those of you new to my work, this left column is the daily, this middle one is the weekly, and the right side is the monthly. This is a stock that made an all-time high, going from, well, let's just go from the most recent low back in March of 2000 to 301. It went to 50.19. Now, there are so many stocks that have gone from under $1 to huge double digits. That's another reason why a digestive period, I think, is actually very good. I hope it's a digestive period and not it's a major, major top that we have seen in April and May. So Westport Innovations made its high in March of this year at 15.19. It's got this pattern that I call the Eiffel Tower, where it goes straight up and then straight down, but in fact it stopped at just in the support area from September, August of last year. So now the monthly chart, the technicals are very poor. The price action so far this month, we're only a week into the month, is not bad. So the weekly chart has a left side, right side price time match from the way I choose. And folks, I'm going to be teaching about dojis, the way I use doji candles, really important candles in my work. There's also a technique that I developed called the silent doji. It's the doji that you never see, nobody ever talks about. If you did a scan, you won't find it. Why? Because it misses by a certain something or other. So this is very important, because it's had a very nice weekly candle, but today's Thursday, we've still got Friday to go. The stochastic's turning up, the on-balance volume's turning up, the MACD has a tremendous amount of work to turn up, so it's just flattening out. My recommendation is this. It's at 28.38. The weekly chart says, if, and I have to say if because we don't know, but if it takes out, now, this is not closing. I'm just saying if it takes out 30.40, the high of the week of 25th of May, that's going to be very important. I always forget to type in, what do they do, Westport Innovations?
They convert the engines into natural gas.
Oh, I remember. That's right. And that, you see, when you're looking at long-term trend, I like to look at the tide. I consider that the tide is the most important thing to trade. We took profits in our longer-term positions, our core positions, last week because I thought that the tide could perhaps be turning, and I didn't want to get involved with fighting a tide that might be turning down. So another position we have on the short side, I think I've got the tide right, and I'm holding the short as a core position. So now let's look at Westport as a potential tide economically, and then we'll look at it in terms of as a socio-economic perspective, from a perspective, and then we'll look at it from a chart perspective. We'll be right back with Ari in Arcadia. The Dow is up 70, S&P's up 4. We'll be right back at 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. We are back. This is Basil Chapman sitting in for Kate. Kate will be back next week, and I won't be here tomorrow for my show at 11 o'clock. So, and I will actually be on vacation next week. I'm hoping to be able to do the Wednesday show, but so far, we'll see what happens. Now, we're on with Ari, and we're looking at WPRT, Westport Innovations, Inc., and they're trading at 28.47. Now, if they do this modification to engines as a long-term position, I would say that I'd be considering it if two things happen. One is if the I would need to see, whether they're starting to make money, etc., etc. That's really important. As soon as they start to make money, this is going to be a viable company. But in this particular instance, I also need to wait. I need to wait to see if the rally that's unfolding right now in the weekly chart. Sorry, I'm moving charts around. I'm going to the weekly chart. If it in the next 3-4 days starts to decline and closes under 25, I have a left side, right side price time match, which would take it to the 20.01 area. That would be very serious, and that would be going to about the first, second week of July. But at this particular point, so far, it's a successful test of the lows. It's above the 200-period exponential moving average. So I'm going to make two suggestions to you, neither of which you just have to dive in right now and do. One is, if This is single leg A up in the daily chart, and there's a pattern that I talk about often. It looks a little bit like a snail with a shell. When you go to the left side low of 22.33 on the 17th, it goes up in a single leg A. That's that pattern that I call the Eiffel Tower, or the single leg A failure. And because it came all the way back, went to a lower low. That's a negative. But the fact that so the low that we were talking about was 22.33. It closed on the 4th at 22.27. So it closed underneath that, and that says, it should be able to rally, but the best that it can do, if it goes over the previous left side high bar, in this case it's the high of the 26.73 level on the 28th of May, it could go back and retest the previous high, but it's probably not going to go very much higher than that. And if it does, that's a big positive, because then you look for the next, either the left side peak or the 200 period exponential moving average, and that would be 31.65 on the 200 period moving average, or 32.49 on the peak of the 3rd of May. So here's what I'm going to say to you. This action that we've seen with way better technicals than it was when it started the rally on the 17th should have taken it to a new recovery high. I'm sure that you would have recognized that it should have been over 30.40 today, right?
Yes.
So that's the day's not done. It could still do that. But what's really important is that if it holds above 25.99, if the market pulls back in the next 2-3 days, let's say the Dow pulls back 80 points and the S&P 7 to 8 points, and this thing holds above 26.20, 26.01 is the level to watch in the daily, then I'm going to say to you, hey, start a very small position. It has to be considered. You have to forget about the long term. It's only a small position. Why? Because if it continues to rally and the stochastic can go from 43% to 63%, the MACD is going to improve, the histogram is going to improve. There's a good chance you've got a nice trade going towards the 31.65. If it goes to 32.67 in the next 3 to 4 sessions, that's very good action, and then you're already in, and you can even consider around about the 31.65 level, where the 200 period moving average is, whether you want to add another small position. So a small position, I'd even say you could nibble on it right here, because it's acting quite well. Not as good as it should, but pretty well. But on the small position, I'd have a stop at 26.74. I'd have a stop at 25.74, and if it can go to 28.74 right now, I'd have a stop at 20. I'd only have a 1 point stop, even though it's a very small position and it's really a feeler position. I'd have a very small stop. But if it starts to rally, closes near the high of the day, and tomorrow, whatever the market gives, it's able to survive and not go into 28.60, I would say that short term, that's very good action. Fails, if it gives back another single leg A up and goes under 25, I want no part of this. So that's my recommendation. Just a little nibble right now to get a better feel for the stock with about a 1 point stop. But those are the parameters I'd be looking at, because if next week, if on Friday it closes near 29.60 and next week it can go to 21.50, all of a sudden you've got yourself a little mini uptrend. Hope that helps you, Ari. But on a longer term, I would have to say I'm going to wait about another 6 to 8 weeks to see how the stock is doing. Thanks for calling. I hope that helps you.
Thank you.
Thank you very much for calling. So, folks, let's go. These are the stocks that I want you to look at. I know that Kate had mentioned, let me find it now. Oh, WWW. I wanted to get into this for my subscribers because I love the action just recently, but it moves so quickly. But I also didn't want to do it for one reason. WWW. How many times am I going to write W's? You're not even sure. When you see it up and printed, you can't even tell the W's. It looks like an echogram. Okay, so this is very important. Webcom.group, Webcom Group Inc. Is trading at $16.66. It's down 19 cents. The monthly has had a spectacular move from $2.05 back in November of 2008. Peak A was in January of 2009 to 407. Peak B was at the $4.93 level in September of 2009. Pulls back sharply, then screams up to peak C at $16.61. There's that round number, $16 on the high of the April of last year, and then 1 penny higher. I call that the silent double top. I'm going to do my Master Trader Series tomorrow. Is going to work on that as well. So what happens, it pulls back from 16.01 all the way down to $6.47. Then it goes to leg D. Now, I'm calling this leg D with a high of 17.24. The MACD is very good. Stochastics at 80%. I'd prefer if it was higher, but it is rising, and that's good. So far, there's nothing technically wrong in the monthly chart. The weekly chart says, oops, it disappeared. Weekly chart's right there. Let me open it up so you can see in Tiger TV. Now, I can very easily draw, I'm going to teach how to do this tomorrow, a channel line. And then for my software, a trade session, I can just easily go click, and it gives me another parallel line. Some of you have just as easy a software package. Sometimes a little difficult, but it doesn't matter. You draw a parallel line. Now, what's important about this is that I can immediately, I'm not bothered with this low one because I don't want to make the chart too messy, but at the top, I can make this green, and I can make the lower one red. Now I've got an inside track, and that says, wow. Look at that. Every time it got right into that area, that was the repellent zone, the sell zone, I call it in the Chapman wave. We used to have someone, we had a little fun, and we used to call it the cal zone. So when it gets into the cal zone there, you've got to be a little careful because I've got an alternate wave count. The MACD is still quite good, not as good as it was at that peak F top with the doji candle right there in March of this year, March, the week of the 23rd. But then it held that support, and it came back, and it's way above the 9-period exponential moving average. So the weekly chart says the stochastic is lagging. It's only at 72%. It needs to be above 80. But there's nothing really wrong at this particular time. So that says the weekly chart is in the up channel. It's above the 9-period moving average. Got to be a little careful that the stochastic doesn't fail because that's going to drag the price down. Let's go to the daily chart. The daily chart says we've got a technique called the Chapman wave overlapping wave. It goes from the low of $12.43 on the 24th of April. It goes to peak A at 1375 on the 27th of April, pulls back underneath the 9 EMA. Then it gaps up. I don't know what the story is with the gap, but there are gaps and there are gaps. This particular gap is like an air cushion. Why? Because when it consolidated after it ran up, it stopped there that very day that it ran up at $16.43. At the time, I call this F/B, a parallel wave count. Why? I needed to see the evidence. Now, the evidence is that when you get this kind of spike to the upside, if there is a pullback, normally I say within 2 to 3 days, but this goes on for 1, 2, 3, for almost 3.5 weeks. Not once did it break even to the opening price of the 2nd of May at $14.50. The lowest that it went to was $14.74 on the 17th of May. This is www.web.com Group Inc. So what happens within that, it makes what I call an inside buy signal and buy mode in the Chapman wave. There's a technique that I teach which is called the overlapping wave. That says that if within the pullback, after a very strong move, the MACD and stochastic pull back, but the price holds very well, you could get another buy signal which has the same wave lettering on the left side, on the right side as it was on the left. And when the price breaks above the previous major high, this is the high of the 3rd of May at 1633, and you've got the same wave count. Now look what we've got. We've got an inside peak A at 1570 on the 22nd of May, and then underneath the 1643 high, we've got the high of the 29th at 1639. That's peak B. It says that when you take out this last peak B, the leg that takes it out, usually it happens on a C, but this happens on a B, the leg that takes it out, which is leg C, re-triggers the buy signal from the first one, and it's like getting onto a highway. You know when you go on a highway, you go on the access road, the entry road, and you look back in your mirror and you've got this traffic coming on, what do? You don't slow down. Well, some people slow down. That's when the accidents occur. But what you want is to accelerate, to go even faster than the traffic so they catch up with you and they don't have to slow down. I'm waving my arms. You can't see that. That's what I call the Chapman wave, overlapping wave. It is a really important technique. And what it says, that you can still go to a leg D. So this is a powerful leg C. There should be higher highs to come. The risk reward is nothing like it was when you went 1 penny above 1643. I should have put in I should have put in a buy right there above $16.43 at 16.44. So that is the way this particular technique works. Now the 120-minute chart says, I didn't finish it. Now, there's a technique that I use in the Chapman wave. It says when you get to a peak D, that's when you've got to be very careful. So how many times in the 120-minute charts have we seen peak D and then it pulls back? There it is, peak D. I don't make these things up. There's no way. I mean, it just happens over and over. That's how I got to the 7 waveform, which was the beginning of my Chapman wave, when I found out I used to do closing price chart, hand-drawn, on this huge, full-size, almost the size of the wall, graph paper. And back in August of 1987, my first client was Fidelity Investments that summer, and they'd just become a full-time client. And I got the sell signal based on my Chapman wave, closing price. It went to a peak D, and I said, no, that's the 7 wave, but it can go to 9 waves up. And that would say to me that it could, in fact, go to leg E. And I had the sell signal. I said, we're going to wait. I can't remember. Was it 27, 22? I can't remember what the price was. And then I got my sell signal at the very top, based on the Chapman wave, in August of 1987. And that's when I learned that the waveform can actually go into higher waves. It can go to a leg D, a leg E, F, and even a G. But look how many times we've got in this, just today, looking at peak Ds. It's amazing. I think even Westport did the same thing. What was WPRT? Yeah, Westport. There are peak D, beautiful peak D in the 120-minute chart. Goes from 22.33 to the 30.40 peak D, pulls back, left side, right side price time match. Now we've got a left side, right side price time match, which says that the 30.59 area has to be hit by later today. I don't think it can, by 3:30, 30.59. But that's the way this works. We've made a peak D and it extended to E. So I just wanted to explain that. So yeah, we are back again at the stock I was looking at, which of course by now I can't even remember what it was. WWWW. Oh, it's even hard to say. There are. Did I put in 5? Yeah, put in 5. So WWW, I like it very much. I think that it is going to go higher. The risk reward is nothing like it was as it broke out above 1644. But the question is, for me, is it going higher or lower? Right now it's going higher. And then you've got to be careful. Why? Because it has this very strong resistance right at the 1790 to 1815 area. That's where it should be. It should have a lot of resistance. And another one I wanted to look at was, there's the break, was CHS. I know that Kate had spoken about. That's Chico's Fashions. Now that's different. That's made a peak E in the weekly chart. All right, I'll be back and we'll talk about it. We've got a caller online, and we will look at, Travis wants to look at CSTR. I'll start doing some work on that. I wonder if I've got it already. CSTR, very familiar, whatever it is. Yep, all notated. Peak F in the weekly. I'll be right back with Travis straight after this.
You've heard Basil Chapman on the air hosting the Tiger Technicians Hour and always wondered what's behind his powerful Chapman wave. Well, Basil has just announced a one-day online master trader course where he'll explain his Chapman wave methodology in detail so that you can learn how to chart Basil's one-of-a-kind formation techniques in real time while the market is open. Not only do you get a full-day online master trader course with Basil during live market hours, but by signing up now, you also get a free month of his newsletter, The Opening Call, a $128 value, along with access to his Moving Averages webinar, another $99 value. This online course takes place Friday, June 8th, and will be archived so you can view it as many times as you like for 30 days following the course. Make sure you take advantage of this one-of-a-kind Master Trader course with Basil Chapman during live market hours by visiting the front page of TFNN.com and reserving your spot today. In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So Chapman, we are back, and I'm sitting in for Kate Stalter. And online we've got Travis in St. Louis, looking at Coinstar, right? Hi, Travis.
Hey, Basil. How are you this morning?
I'm good. How are you?
I'm doing great, man.
Good.
Yeah, I'm long Coinstar from around 59.5, and I'm wanting to stick with the position. I've got a few other longs, but this is my largest position right now. And I guess the VIX, I would feel a lot more comfortable if the VIX would get below about 21 to sit on it for maybe another week or two. But until the VIX gets below that level, I'm getting a little bit concerned. So I just thought I would get your opinion on this. As to what you think it has some legs.
All right, there are a number of things that are happening. Since you brought up the VIX, let me just say that until the VIX starts to close decisively under 20, the rally, even though it's great, has to be considered suspect for sustainability. That's all I can say. As soon as it starts to close in the teens again, we can start to move higher in the general market, because that, to me, represents buying power. My 120-minute chart on the Dow says we've made a peak C. There should still be a leg D to the upside. So I just wanted to get that out of the way. Now let's go to Coinstar. Coinstar is trading at 61.89. This is leg D up in the daily chart, but it's gone up on price, but I've got no technical veracity at all. The stochastic's only at 54%. The MACD is good. The histogram's good, but the MACD is actually underneath the 0% line. I like when it's up at the top. So this says to me that the price is moving well. That's good. But I'm going to ask you to be very careful, at least on some of your position, because if it closes under 60.60, which was the gap from yesterday, and then it starts to go into the 59.47 and fills the gap, but then breaks under 59.47, I'm sorry, it's 59.47. You've got to be careful, because in the, let's just do this quickly. So this is leg A, B. So this is C, a very sharp C up in the 120-minute chart, but I have to do this. How much time do I have? Yep, I got time. Here we go. Okay, first of all, if it's your largest position, I'm going to say to you that's even more the reason why I'd be very careful if it breaks down. So E, F, G. So I have no choice but to call this A, B, and C. It's unusual for the 120 to break down from a C, but it certainly can happen. This is what I'm going to ask you to do. Based on the weekly chart, it made a peak F top. Then Chapman wave, that's a bad sign, because it had made a peak F top at 69.74 and then pulled back very sharply. Now it has the potential to it's fighting two chart patterns. I'm going to spend a lot of time on this tomorrow, because this is what we're going to be looking at all summer. It either has to break decisively into the 60, it's a 61.80. It has to get into the 63.5 to 65 area to really say, hey, I'm going back to the previous high, or else the pattern that's the falling axe pattern. That's where it breaks the trend line, resistance, closes above it. It says, great, I can go now to the next left side peak, which would be at 67, 62. But if it starts to fail, the moment it takes out 56.27, which of course is way below where you entered, that's going to be very poor. Now, the monthly chart has a potential for a double top. This could be E/B. I'm calling it E/B so far. So here I am. I'm going to say to you, be very careful with at least part of your position. If it closes underneath 60.20, that's $1.60 from here, I would start to lighten up on that position. You can always add it back again, but most importantly, it's not how high it can go. If it breaks down, just be very careful. Hope it helps you, Travis.
Basil.
Thank you very much. Folks, Basil Chapman sitting in for Kate Stalter. I will not be here tomorrow. I'm doing my Master Trader Series. Hey, you can still sign up and you can get the whole program for the first couple of hours all there on your page. So think about it. I'm going through all these patterns. I believe it's going to be an incredible experience for you, because it's looking at the patterns to follow for next month.
Are you looking for